this week, Unilever spun off its ice cream business as the Magnum Ice Cream Company, MICC for you home gamers, creating the first pure-play ice cream stock that I can recall. Unilever announced this nearly 2 years ago, but to be honest, I really didn't pay a lot of attention to it. So it took me by surprise when I came into work yesterday to see this multi-story tall banner of ice cream outside the New York Stock Exchange with free samples flowing on the floor. Klondike bars for all. I'm still mad at myself I didn't grab one. But I did ask myself, hey, maybe this thing's worth owning. Unilever didn't seem to want it, but maybe it'll be worth more as an independent company. I'm optimistic. I'm going to tell you why. First, the Magnum Ice Cream Company is by far the largest player in the industry. They own 4 of the world's 5 largest ice cream brands, Walls, Magnum, Ben & Jerry's, and Cornetto. Overall, they sell more than 100 brands across 80 countries, including my old fave, Breyers from when you grew up in Philadelphia, that's what you have. Good Humor. I was never the Good Humor man, though. Klondike, along with Talenti Gelato, which is my favorite gelato, not that you care. The Italians will tell you this is not ice cream. Then Yasso frozen Greek yogurt bars. I don't like that. But that doesn't mean anything. Put it all together, and the Magnum Ice Cream Company has 21% global market share. The next competitor, close competitor, is a British company called Froneri, and that I've had their stuff, has just 11%. Nobody else has even more than 2%. Magnum's the market leader in every developed country except India and China, where they're number 2. Now, despite the rise of these GLP-1 weight loss drugs that have been hounding the packaged food industry, the ice cream business has been doing pretty well. As for Magnum itself, the company was struggling for a while under Unilever. They saw a 6.5% decline in volume in 2023, which is one reason their parent company was so happy to do the spinoff. But once Unilever decided to separate the businesses, well, the ice cream division started buckling down, enacting a plan to achieve €500 million in productivity savings and reinvesting those in ice cream, something they couldn't really do as part of a gigantic conglomerate, could they? Here's how CEO Peter Takulva put it when he came on Squawk on the Street yesterday morning.
Unilever needed to focus on its category, and we needed real focus on ice cream. I now have 19,000 people who go to bed thinking about ice cream, who get up thinking about ice cream, and we're able to invest behind the growth opportunity. And we don't have to balance that between all kinds of different categories in Unilever, but the focus is on ice cream.
Anyway, of course, he's wrong. There's 19,001 people who get up and go to bed sleeping with ice cream, and that's me, but there's nothing I can really do about that because I don't work for him. But this company has already started turning around with organic volume growth going positive again, up 1.1%, while organic sales are up 2.8%. Remember, they were down. The company's gross margin improved for the first time in years. I'm thinking this thing might be a gem. In the first half of 2025, the momentum continued. Magnum's organic sales growth accelerated up 5.8%. Market share ticked higher. Margins dipped a bit, leading to roughly flat profits year over year. It seemed like the company's trending in the right direction, though. Everybody in the snack food space lives in fear of Ozempic, yet Magnum Ice Cream is putting up solid sales and volume growth, so clearly they're not being hurt too badly. The company has plans to boost its profitability through modest price increases, and they're targeting organic sales growth in the 3 to 5% growth range. I mean, that to me is pretty good. But maybe the most important part of what Magnum's had to say is about the GLP-1. See, when you ask most packaged food CEOs about these weight loss drugs, they're incredibly cagey about what the impact's been, even if they may even deny there's any impact at all. But that's their problem. But when Peter Takulva came on Squawk on the Street yesterday, he was incredibly straightforward. First of all, Magnum's not in the dark. They had good data on all of this, including from U.S. retailers that sell both GLP-1s and ice cream. What they found is that for every 12% market penetration for the GLP-1s, which is about double what we have currently in America, the ice cream market takes a 0.5% hit to volume growth. Now, that's real. It's empirical. It's not great, but it's, I think, a lot better than people thought. His theory: people don't tend to mindlessly gorge on ice cream the same way they gorge on potato chips or on Ben & Jerry's, okay? No, this is a cookie dough. I had this just the other day. It's really good. Plus, in terms of calories, ice cream is much better than chocolate or chips, and it's a great source of calcium and protein. So at the end of the day, Magnum's simply not suffering very much from the rise of the GLPs. It's kind of better than people thought. The other issue that's making headlines here is that the founders of Ben & Jerry's have been making a lot of noise, criticizing first Unilever, now the Magnum Ice Cream Company, for not promoting the brand's original values. This, to me, it's unimportant. Those guys sold their brand to Unilever 25 years ago. When he was asked about the issue yesterday, Magnum CEO dismissed the issue, saying that the founders are unhappy and want the brand back. Obviously, it's not going to happen. It is Ben & Jerry's is making a fortune for Magnum anyway. Now, I've got to tell you, that issue keeps coming up, and it just doesn't mean much to the stock price. Finally, let's talk valuation. After a solid start this week, including a 4% gain today, Magnum currently sits at $15 and change. A couple of analysts have rolled out coverage on this stock this week, so we have some early consensus estimates here. Magnum's expected to generate $1.26 of earnings per share this year, though that's expected to fall slightly to $1.23 next year as the company makes some investments in its first year as an independent entity. I'm fine with that. Either way, you're talking about a stock that's selling for roughly 12 to 13 times earnings. Now, let's think about this. This is not bad. See, Hershey, the leading chocolate and candy outfit, sells for 27 times next year's numbers. Cookie champion Mondelez International is closer to Magnum, but still trades at a premium, selling for 17 times next year's numbers. Nestle, good comp, is a European food company with big chocolate and even ice cream business, is in the same range at just under 18 times next year's numbers. That said, these companies are expected to grow earnings next year, whereas I just said it, Magnum's currently expected to take a small earnings hit in 2026. Still, the stock's trading at a pretty sizable discount to its peers. So if you want to bet on the ice cream business, you got my blessing to do some buying right here. I love an IPO that comes out and doesn't shoot up to the sky and then everybody gets hurt. I like one that's not on anybody's radar screen. That's this deal. Here's the bottom line. We finally, by the grace of God, or at least the grace of Unilever, have a pure play ice cream stock now that the Magnum Ice Cream Company has been spun off and started trading independently. And after taking a closer look at the story, I have to say this one's pretty sweet. I'm sorry, I had to go there. Couldn't resist. And may I also say, apropos of how to make money in any market, my book, if you want to give a share of to a kid of a stock, and you want them to follow it, I'm thinking it's this one. I used to think it's Disney. This one has more upside. Let's go to Bill, North Carolina. Bill.
Morning, Jim. Merry Christmas.
Bill, what's up?
Hey, I bought Shake Shack back when they said it's the best thing since sliced bread. They got tons of cash. They're building stores. Bought it $123 a share. I'm losing my shirt. Should I hold or sell and go to the poorhouse?
This is such a great question. Now, you have to understand that Rob Lynch is doing a remarkable job, and he's a great CEO. Here's the problem. This stock is trading with the price of beef, and cattle went up and up and up. I think the president's going to try to bring cattle down. I think that means you buy Shake Shack. I think it doesn't matter where stocks come from. It matters where it's going to. I would never bet against Rob Lynch. I think that you buy Shake Shack at $79 a share. Now, if you want to bet on the future of the ice cream business, which I have to tell you, after doing the research, I do, this is the best of the bunch. And you can do some buying right here of Magnum. Now, there's much more Mad Money ahead, including my sit-down with Weyerhaeuser. The lumber producer stock has been going down for most of 2025, but is it too late to yell timber? My favorite song. I'm getting the latest from the company's top brass heads, which investor. Then Cisco's finally round-tripped its dot-com era highs. I'm going to break down why the stock looks more compelling now than ever. And Oyer calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.